Thanks so much for tuning into this conversation. To all our viewers, a very happy Diwali, and for the day tomorrow, Sal Mubarak. And indeed, it's been a good start to the new Samvat for Biocon for sure, because the numbers looked fairly strong. 50% uptick in PAT, and this normally would seem very large, but they've already done a 60% uptick in revenue. Excuse me, 60% uptick in revenue at the end of Q1. So this 50% uptick in revenue kind of follows through from what they have already shown in Q1. And almost in line with estimates, Bloomberg estimates. Margins slightly lower than what was estimated, but the bottom line number looking very healthy. Let's get in Siddharth Mittal to talk about how he thought the quarter in the first half went and what are the signs for the second half. Siddharth, good morning, and to you and yours at Team Biocon and family. At the outset of this conversation, a very happy Diwali and a prosperous New Year.
Thank you, Neeraj, and a very good morning to everyone, and a very happy Diwali to all the viewers. Very excited to be here in this discussion. As you mentioned that we had a good Q2. We had a 52% growth in our top line, primarily coming from biosimilars, where the revenues almost doubled. Primarily coming from the closure of the Viatris business acquisition that we completed in December of 22, and that contributed to the growth. The research services business also had a very healthy growth of 18%, while generics business had a muted growth of 4%. So combination of these three led to a very solid 52% growth over last year. In terms of margin, we continue to make margin expansion. The EBITDA margin grew from 22% to 25% this quarter, but the reported margin, the net margin, degrew a bit from 7% to 4% as a result of decrease in the minority shareholding, which we had from Syngene, because we had sold 15% stake in Syngene to fund the acquisition of Viatris business, plus all the cost increase in depreciation, amortization, and interest expense associated with the acquisition of Viatris business did impact the profitability. So overall, we still see an increase in reported numbers in net profit from 47 crores to 126 crores, and we are continue to work on expanding our margins in the coming quarters.
I don't know why my numbers seem slightly different, but here's my question. Let me first stick to the revenues, because you had a 60% uptick in revenue. As per our numbers, 49% uptick in revenue to 3,460 crores. Now, tell us what's this biosimilars led push that you're getting, and of course contributed by Syngene and some other businesses. But does this have legs to last for the next couple of quarters or even more? Because from FY25 Q1, the base effect might also kick in.
So what if you look at the exit run rate when we exited FY23 was around 2,000 crores revenue for biosimilars, and today we are at that run rate. And I think we are quite confident that as we exit this fiscal year, we will have $1 billion in revenue coming from biosimilars, which is coming primarily as a result of the acquisition of the Viatris business. Now, as we move forward to FY25, of course, we look at adding more volumes, increasing the penetration in emerging markets, but also we expect new launches, which are, of course, subject to the approvals from the FDA on two of the products which are under review with the FDA, which is Aspart and bevacizumab. And we, of course, have had a launch of adalimumab or biosimilar adalimumab or Hulio, and we expect that also to contribute in next fiscal. We, of course, have to see how much would it contribute, but the base of 1 billion in FY24, and then there are a couple of growth drivers in FY25.
Okay, but I'm guessing you will probably be able to kind of predict this only at the end of FY24. So maybe we wait till then. Just a question though. A lot of chemical companies, I'm not comparing, but I'm just using that as a benchmark. A lot of chemical companies that I spoke to, and companies in the specialty chemical space as well, are saying that global clients are now renegotiating prices even at the specialty end because of the slowdown that the global chemical stroke other businesses are facing. Now, I'm just trying to understand. You're not kind of linked that way, but I'm wondering if for the work that you're doing for some of the global clients, are are renegotiations coming into place because of the slowdown and the pressures that those clients might be facing?
Well, there is normalized negotiation or renegotiation that's happening. I won't say there is an additional pressure on the business that we have. Let me remind you that today we are supplying generic API to many customers globally. But when it comes to supplying to innovators, it's very limited business that we have either in Syngene or in Biocon. It's more tended towards fermentation-based APIs or biologics. I mean, even Syngene, if you look at, there's a 10-year contract with Zoetis, and then on the Biocon side, we supply a couple of niche APIs to global innovators such as Merck. But there is not really a big discussion or a trend that we have seen. But on the other side, on the generics API side, the synthetic APIs, we have seen definitely a lot of pressure coming from customers, where customers are coming back and asking for steeper discounts compared to what they had asked in the past. And that's coming as a result of excess capacities available globally, especially China, on these chemical APIs.
Got it. So no major concern for Biocon, I'm presuming, as a console entity.
That's correct. We do not see any impact of that.
Okay. Now, at the end of quarter one, despite you having 60% revenue growth, your margins were a bit soft. You had mentioned then in conversations, and I believe on the con call, that you will start or embark upon the trajectory of improving margins during the rest of the year. You've kind of done that, 21.41 margin as per our math, but slightly lower than what Bloomberg estimates were of 23%. I know you mentioned the word 25% on your EBITDA margin, but as per the math that we did, stripping off other income, it came to about 21%. Is this a number that you are happy with, and do you believe this can move ahead, or will it stay steady at these levels as well for the second half?
I won't expect a significant change in the second half. So we've, of course, seen an expansion in the core EBITDA margin of biologics compared to first quarter. It's gone up to almost 34%, or mid 30s is what we have guided for. Unless there is a new blockbuster launch, we do not see really a margin expansion across our businesses. So we expect these kind of margins to remain. And once we do launch, new products coming in FY25, that's when we will see a margin expansion.
Just three more questions. One, at the end of quarter one, you had mentioned that for Semglee, for Glargine, and a few others, the data in July was showing a very favorable print. You were hopeful of a favorable print in August as well. Is the 49% result revenue growth a result of the prints looking very good for these, or is there scope for improvement here? I'm just trying to understand what's the quantum of revenue growth that you envisage for quarter three.
I think, as I mentioned earlier, that for the biosimilars business, we did roughly 2,000 crores in quarter two. We did a very similar number in quarter one, and the full year guidance is roughly $1 billion, which is 8,000 crores. So we expect second half to be on the similar lines as first half. But when you look at our individual products, we have made a good progress. If it's in the US, if I look at last year for biosimilar Semglee, we had 9% market share. That's gone up to 11% market share. For Fulphila, we have gone up from 11% to 19%. And biosimilar pegfilgrastim or Fulphila is the largest, has the largest market share of pegfilgrastim in the US. And as far as trastuzumab is concerned, there also we have gone up in the market share from 10% to 12%. So we continue to gain market share. We continue to progress on the products which are already in the market. But and we do expect that even in second half, we will continue to gain more market share basis some of the contracts that we have already signed with our customers, and the supplies would start in H2.
Yeah. Well, excuse me for that, Siddharth. I know you answered that. I somehow missed kind of remembering that, and therefore the repeat question. Two more questions. One is on debt reduction. And please, again, correct me if I've missed it, but at the end of quarter, you had mentioned that the debt reduction, the CapEx will happen with internal accruals, but for debt reduction, you will have to go ahead and sell stakes, whether in part or at one bunch. Now, where are we on there, and what are the targets that you set for yourself in FY24 and maybe going ahead?
We have not really communicated the target of debt reduction we want to achieve. But what we have said is today, if you look at the debt in Biocon Biologics book of 1.5 billion, we are looking at reducing that so that we are in a comfortable zone. And I think we are in discussions with investors. Of course, it's taken a little longer than anticipated to close these discussions, but we expect that within this fiscal, we will be able to bring down that debt to a more reasonable levels, I would say.
Would you do it in multiple bullets, or is it a single shot debt reduction or a single shot stake sale that you're thinking of?
Well, we are not really looking at a stake sale. We are looking at deals like we had announced in the past. We had announced a deal with Edelweiss. We had announced a deal with Kotak. And these were more structured finance. So we are discussing with investors on a similar kind of financial models.
Sorry, excuse me for that, but I had thought that there was some conversation that you were wanting or having with private equity funds for an equity stake, which is why I asked this question. So that's not true.
Well, the structured finance will end up being resulting into equity dilution, but there are minimum guaranteed IRRs that are there to begin with, and only at a time of IPO, the conversion happens into equity.
I get your point. Okay, thanks for that clarification. I have one final question, Siddharth. As you now you've been at the helm for a few quarters, as a guy who's heading this very large organization, doing very multiple innovative things, and having multiple, for lack of a better word, segments like Syngene and others. How do you see this this behemoth being like in, let's say, 2-3 years down the line, or 5 years? I don't know what kind of timelines you set for yourself, but if you can give us some sense about that.
That's a very interesting question, and let me say that all of our businesses are at a very interesting point and an inflection point where we see significant opportunities in the coming years. Now, if we start with Syngene, Syngene is migrating from being a traditional research-based organization to more research plus manufacturing-based organization. And as you can see, the opportunities in the manufacturing as the CDMO space is huge, and there is a lot of push coming in from the US customers to outsource to East, and that's, of course, Syngene is very well positioned to benefit from that opportunity. And the existing base is very solid, very good customer base. And when you look at the service offerings that Syngene has, we definitely think that there is a lot more opportunity to expand that business as well. When it comes to biosimilars, over the next decade, you have multiple drugs which are going off patent, and you can read multiple reports, but the opportunity is north of 200 billion of drugs which are going off patent, and biosimilars now as a fully integrated enterprise is very well positioned to play in that market, whether it be antibodies, whether it be insulins or other protein-based biosimilars. And if you look at the portfolio of Biocon Biologics and the progress on the pipeline, and we will have a lot of exciting launches coming up in the next couple of years. And when it comes to generics, again, there is a huge opportunity that we see in GLP-1s, which is an emerging space. These are the drugs which are there to treat diabetes as well as obesity. The global market is expected to be again north of $100 billion over the next couple of years, and that's where Biocon Generics is very well positioned to address that opportunity. So when you look at all the three businesses, we have invested heavily in these businesses. We have some differentiation, and we are very well positioned to have a good growth in the coming years.
Good is, sorry, last question. Good is 10, 12%, 15% CAGR. Good is slightly northwards to that number. Sorry if I'm underestimating your potential, but just asking you.
Well, I would not hazard a guess by giving a number, but I definitely, when you look at the pharmaceutical industry in general, I'm seeing growth of mid-teens over the next couple of years. That's what the analysts are predicting, and we definitely expect to beat that growth.
And that's the least that the street expects of you, Siddharth, with all that you're doing. So, congrats on the revenue growth. And you've started an EBITDA margin expansion in quarter 2 made last. Thank you so much for taking the time out. And to you and yours, once again, have a great summer.
Thank you, Neeraj, and same to you.
Thank you so much, and viewers, thanks for tuning in.